Hey traders, Trader Tim from E-mini Mind, bringing you another Monday market analysis. Today is October 26th, 2015. I want to jump into some trade recap, talk about some trades that we had this last week. I think first we'll start here with the bigger picture on the ES. Like we were talking about last week, coming up into this 2040 level and just kind of hovering. You notice that the push was going to be a very forceful one because once we broke highs, there was not a whole lot of anything above us until we got up to this 2040, 2050 level. And so that's what we got. We were moving sideways. We broke highs. We had a lot of follow through by the bulls, and ended up with a nice big body candle here on Thursday. Thursday was a very actionable day, as we'll go through some trades here in a minute. The next 2 days, Friday and today, small body candles. I would look for us to potentially get some sort of a rebound or a decline here back to 2040s. If we look at the 50% retracements from lows to highs, we traded up to its target and then some. So I'd be looking for us to trade the next daily move, which is 2041s. And then in the meantime, looking for some back and forth as we move higher here. It wouldn't be expected that we'd move straight up back to highs just because there's so much congestion back here. I want to start with the euro and talk about what happens when we have a setup on the 512 tick chart, and particularly what we do when we have two setups. So the rule of thumb is whatever trades first is the setup that you go with. And so what we have here is a larger short, and it's larger just because I can see it on a 15-minute chart. If I draw the 15-minute chart here, basically looks the same as the 512, only we're on 15 minutes worth of time. And so you can see we made a high, we broke the prior swing low, we rallied, and just drawing from highs to lows, that gave us the short setup. Now if I go back to the 512 tick, you can see just following that, the opposing traded from lows to highs. And while it was a little bit dirty, the setup still held. If you were to put your stop at 95s and your entry at 02s, you'd have a 7 pip stop. So even if you were getting long here, even though the 15-minute short traded, they don't always follow through. And so in this case, let's say you didn't see the short and you just took the long setup. You say, well, we broke the swing high, we formed the low, we broke the swing high, total valid setup, placing your stop 2 pips below the 61.8, and then it's just a matter of, as the trade progresses, what I like to do is trail my stop. So once the next bar forms, to move your stop underneath the swing low, in this case, because we're long. So if you were in this trade at 02s, and you were trailing your stop, even though we only had 2 bars here, the low of this second green bar is 01s, so if you put your stop at evens, you'd be stopped out for a 2 pip loss. So even though the trade didn't end up getting follow through, meaning didn't trade up to its target, with managing your stop, you can be quote unquote wrong on the outcome of the trade, but you can still tighten your stop and still limit your losses. So rather than having a full stop out of minus 8 pips on a trade like this, you could take a loss of minus 2 and move on to the next one. So that's just a little bit of when we have conflicting setups where we have a larger 15-minute setup. If we were to back it up in real time, you can see how it's at this point, you could say, oh, okay, well, I'm going to wait till we break the swing high and wait for a pullback to get long. Well, in the meantime, the short touched first. So let's say we only came up here, or right This one's a little close because even if we broke the swing high, we'd be so close to the short. But in any case, whichever one trades first is a setup that you want to go with. So let's go over to the ES, and we'll talk some more about that. I'm going to go down to a 512 tick chart. And as I do that, you will see that today's price action, when I zoom in, was not so great. You know, we have a lot of this couple bars in one direction, couple bars in another direction, back and forth, back and forth. Not a clean series of stair steps, if you will. But if we go back to Thursday, and I did a little bit of Facebooking, posting about Thursday's price action. I'll go all the way to the beginning of the day. And so now this price action is clearly directional. You know, just by looking at just one screen's worth here, zoomed in pretty far, only about 30 minutes of trade, you can see that we're clearly directional compared to today's price action. So when you're first opening your trading screen and 15-20 minutes go by, those are the kind of small things to pick up on just in terms of what am I seeing with the compilation of price action. So, and right from the morning, right off the start, we formed a low, we broke a swing high, and we had a nice little 50% long. And so what I like to do on the ES, because the euro tends to move quicker, and since the ranges are bigger on the euro, you can get away with trailing each 512 tick bar on the euro and, take away 15, 20 pips on a small trade. And in some cases, if we're moving quickly, 40, 50 pips. And so the ES has a little bit more chop action, a little more backing and filling with these small pullbacks. So what I like to do on the ES with the 512 tick chart is trail the swing lows. You've all heard me talk about this quite a bit. I do it on day trading. I do it on swing trading. That's where it first kind of evolved for me, was at the daily charts. But if we're getting long at lows here, we put our stop below the swing low. Just one tick outside is all you need. And every time we pull back, make a new high, take your stop from the previous swing low, move it up underneath the next swing low. And then we pull back, we move higher, pull back, we move higher, move your stop up under the next swing low once we break highs. So if my stop is down here, I'm not moving it to the next swing low until we break the prior swing highs, because I want to confirm that that is a swing low and we're not just going to chop around. And so in a trade like this, you could be moving your stop all the way up here before we break that prior swing low and get stopped out. Thursday was a really great day of trade. I'm just going to pull up some more setups. I think it was 10:35. Yeah, over here. So same thing again. We're trending down temporarily in little shorts. We broke the swing high, so we formed the low. We broke the swing high. We can draw from lows to highs, and that gives us a nice setup. We can trail, leave our stop initially at swing lows. This is not as common as on the euro, where you get these big swings, a couple points in this case. But you can trail the swing low, make new highs, pull back, trail the swing low, make new highs, and then finally get stopped out. So you're trailing swing lows once we make new highs. Let's see, I thought there was a couple other things I wanted to show. Maybe it was later in the day. Examples of where we didn't necessarily break a swing low. Well, I can't find it at this moment. But another one towards the very end of the day, really clean setup. Again, broke the swing high, made a high up here, and ended up pushing pushing higher. And come on, there we go. Locked up for a second. Drawing from lows to highs. Come on. There we go. Lows to highs with another setup here. I talked about this one on the in the Facebook post, nice pullback, placing your stop one tick in front of the entry here, so it's 75s. Stop 6 ticks away. Once we start moving higher, once we break the prior swing high, move your stop underneath the swing low, pulled back. So here's a really good example. Not the one I was thinking of, but a good example nonetheless. I'm just going to remove this one. If I move my stop up underneath the swing low and we make a new high, see, we pull back. If your stop is one tick below, you're still in the trade. And so we rallied to a new high, pulled back, move your stop up underneath the swing low, and we break new highs. You can just keep doing that, and at this case, get taken out right up here at the 2043 level. So, you know, the tick chart's great because you can get in on a small time frame with a small stop, but then you can trail on a little bit larger time frame and take advantage of some of the, you know, larger trend that's occurring. And you know, just as I scroll through here, I'm constantly seeing these setups. You know, breaking is, you know, super small, breaking a swing high from lows to highs, and just trailing swing lows all the way up. Or if it was a short, trailing them all the way down. So that's kind of what I look at intraday when I'm day trading the ES and the Euro. Just a couple trade examples. You'll notice that when we have good trading days, like I was just showing you on Thursday, we have a lot of great setups. So it's important to continue to trade on those days. Days like today, you know, this is today, Monday, a whole lot of nothing, and so those are the days to shut it down and just you know, go do something else. So this week we've got a handful of news announcements. Wednesday, we have the FOMC meeting announcement, so that'll be a day to lay low. Thursday, GDP and jobless claims before the bell, so that's you know, somewhat of a catalyst. If you want to follow along with some of my other posts and things that I kind of post in real time, either check out Twitter or this was my Facebook page. It's just E-mini Mind on Facebook, and you can see I posted some pictures on Thursday of the setup and kind of what I was looking for. So do a little bit more real-time posting and things on Twitter and Facebook, and just search E-mini Mind to check me out there. So thanks for watching, and we'll talk to you soon.